You are listening to chartingwealth.com's daily review for Wednesday, the 3rd of October, 2018. Some special trainings at the end of this podcast, understanding the Heiken Ashi candlesticks. We've got a great video for you. Also, another one on inverse exchange-traded funds, how to make money when markets crash. And the last training video we have for you is vertical crossovers. That's one of two training videos that we have. We're going to give you one of two tonight, the first one, and also about our book, Charting Your Way to Wealth. We have a great video on that with links you can find in the show notes. Also, to purchase the book, we're in our 6th printing of Charting Your Way to Wealth. It's the way we've monetized this channel, and so many of you have been so kind to purchase our book, and we've got a copy for you. So let's jump into these charts. We see stocks are down for the day, the S&P 500 and the Qs. We see that bonds are, what am I saying? Yes, bonds are up for the day, and gold is up for the day big time. So we'll jump into those in just 1 second. Let's jump first into the S&P 500. We see that so far for the week, it is a green up candle on the Heiken Ashi candlesticks. Again, just maintaining above the trend line that has continued to rise. Look how far back we can trace that trend. We had a weekly vertical crossover all the way back in June on this chart. It is just amazing. But what's happening at this point? Well, we again look like we're hitting a high 3 weeks back. We've not topped that again. Derivative oscillators losing a lot of energy. Price percent oscillator is headed down. Now that is some concern. We go from the weekly to the 2-day. What do we see there? We see a sideways slide. We see on the first day of this latest 2-day candle, we do see a green up candle as far as average pace goes, even though it was a down day, 0.06% down. Price is hanging above that weekly trend line. The 2-day trend is actually in a downtrend as far as the price percent oscillator and the derivative oscillator goes. Derivative oscillator is losing a little bit of that downward momentum right now. So we'll continue to watch things, see if that downward momentum is going to be enough to rotate at some point the weekly chart over. And then we go to the 4-hour chart. What do we see there? Well, it tried to peak over going up in the morning and then sort of pulled back in the afternoon. Derivative oscillators positive. It was the price percent oscillator that tried to pop over and pull back. So it's pretty much laminated right now. So again, bit of a stalling effort there. We'll see how this market shakes out as we look at things on Wednesday as it develops. That's where we are on the S&P 500, sort of waiting to see if indeed we're going to have a crossover going down. Has this market finally topped out? Don't know. We're not going to predict it because we're trend followers. We're not prognosticators. We're not guessers. We don't have a crystal ball. We follow established trends. Now let's go to the Qs. Remember, had that weekly vertical crossover, but no entry point yet. We've sort of had a laminated price percent oscillator on the red signal line. In fact, it's actually stayed just below it. Didn't have an entry point over the prior week, ending the 28th of September. We go into the new week, we have a big green up candle, but again, derivative oscillator's negative, price percent oscillator is negative, and a big down, well, not a huge down day, but down 0.23% on this second day. One reason we're giving that training on the Heiken Ashi candlesticks, I want you to understand how they are calculated. They show average pace. And as far as the average pace goes on the Heiken Ashi, green up candle. But again, our indicators are showing us something a little different. Now let's go from the weekly to the 2-day. What do we see there? Look like we might have a crossover on the prior day, ending the first Monday, the 1st of October. That was the latest 2-day candle. The 2-day candle from Tuesday was actually pretty much sliding sideways. The derivative oscillator did go negative. Price percent oscillator went positive. Price percent oscillator stayed negative. So as we delve a little bit deeper and look at that 4-hour chart, what do we see? Well, we see two dojis really, and a red spinning top after a green bump up on Monday morning. That was really the only up move we've had on the Qs. We see the price percent oscillator now jutting down pretty strongly. Derivative oscillator's been losing energy really for the last day and a half. Will it cross over going down sometime on Wednesday? Watch, keep your powder dry. Let's see what happens, because if that does occur, we're primed to jump into a potential down move, since the 2-day and the weekly are both heading down. And again, that training we offer at the end of today's daily review is going to help you understand a little more about vertical crossovers, because that's what we're talking about, that we're currently in right now after that weekly chart crossed over back 2 weeks ago, about a week and a half ago. So we'll go from the Qs, that's where we are, that's what we're waiting for. Go from the Qs to 20-year bonds. Now remember, 20-year bonds crossed over going down back on the 14th. And that's the 14th of September, going on 3 weeks ago now. Derivative oscillator gaining downward momentum. Price percent oscillator headed down. We have 5 decent down candles for an inverse trade. And again, we've got another training for you tonight on inverse funds, so you can understand what we're talking about, how you can actually practice trade on something that's going down, because the inverse fund is actually going up. Listen to that training also. So what do we see happening on the 2-day chart? It is actually losing downward momentum on the derivative oscillator. Price percent oscillator is about flat. We've had a sideways slide now going on about 5 days, so we'll continue to watch. The latest candle is a red down candle. We did tell you that the TLT was up for the day 0.61%. Let's look at that 4-hour chart. Big down day on Monday and really a sideways slide on Tuesday. Thought we might have a crossover going into the morning, but that did not happen. Derivative oscillator still losing momentum, but the price percent oscillator is heading up. So we don't have a jumping in point. We do have the weekly and the 2-day poised down. So if and when you see a crossover going down soon on that 4-hour chart, if there's not a lot of great up movement to change the 2-day, then of course the down direction is what will rule. And if that happens, we'll jump back into a down move. But again, we're going to let those charts lead us. Okay, that's where we are on TLT. Back to the weekly chart. And then lastly, we go to gold. Now, we've been waiting for gold to bottom out and move up. What are we seeing on that weekly chart? It looks like it's trying to cross over going up. Remember, this is a 5-day candle. It's only reflecting 2 days of movement so far. So we don't call the candle until the time period ends, and that'll be on Friday. So we do see things trying to move over going up. Derivative oscillator's already crossed positive. Will the price percent oscillator close the week positive? We shall see, my friends, because I would like us to jump into an up move on gold. We see the latest 2-day candle, big up move pushing through the 2-day trend line as far as the first day of this latest 2-day candle. And we can see that, yes, indeed, we have a derivative oscillator gaining momentum, price percent oscillator heading up. And then we go from the 2-day to the 4-hour. What do we see there? It crossed over in the morning strong and then pretty much leveled out in the afternoon, again crossing through that 2-day trend line. So we'll continue to keep an eye on things. We'll watch and see if by the end of the week we have a confirmed weekly on next Monday to potentially jump into an up move on gold. Hasn't happened yet. We'll see if indeed it does. Okay, great trainings ready for you on the Heiken Ashi candlesticks, inverse ETFs, how to make money when markets crash, and 1 of 2 trainings on vertical crossovers, plus more information about our book. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. And don't forget, I'm going to be traveling starting tomorrow. I will try my best in the airport to put a timely daily review out. And then I will be in Europe for the rest of this week and up through Thursday of next week. And I will be doing my dead level best to get all of our trainings out to you as best I can. Bear with me. God bless, my friends. All the best.